Okay, so this video is going to be about how I choose stocks that I use for AIM. So Sam, this is for you. So the first thing you have to remember with AIM is that it really likes volatility. So stocks that move up and down, make big swings over a period of days, weeks, or months, AIM really loves because it, likes selling as stocks go up and it likes buying as stocks go down. So stocks that trend upward for a long time tend not to do as well. You're still going to make money, but AIM likes things that really go haywire up and down. Now, whenever you're just starting out and you don't have a lot of cash, you may only be able to start with one position or something like that, and that's fine because you have to get started wherever you can. But as your portfolio grows, as you get more cash, you want to build up the number of positions you have. I would say to a minimum of 10. I think I have a lot more than that, but I'm kind of a stock addict. But I'd say at least 10, maybe 20 good stocks would be good. So, but again, if you only have cash to get started with one, maybe only have $500 or so to start with, you can start with that. Just make sure that you have about, I'm going to say 25 to 30% cash above that as dry powder for whenever you buy when price goes down. So what kinds of stocks to find? First rule of thumb that I have, aside from looking for stocks that are volatile, is that for each position you should have enough money to buy or find stocks with a low enough price so that you can buy at least 50 shares. At least 50. Now the reason I say that is because you have to have enough liquidity to be able to buy and sell shares as price goes up and down. And if you only have like 5 shares or 10 shares or something like that, price has to move an awful lot in many cases for or sell or buy to be triggered. And you don't really want to put yourself in that position. So if you have, again, let's say $500 to buy stock with, the top end of the price that you should be looking at is $10 per share. Now, people will say, well, don't get penny stocks because they're which are typically $1 to $5. It's kind of what, $5 and under actually, which are kind of what penny stocks are considered. As long as those stocks have a demonstrated track record of rising, getting beaten down and rising again, those are perfectly good candidates for using for AIM. Now, I do not recommend over-the-counter or OTC or pink sheet stocks that are not traded on the major exchanges, simply because it's not that those companies are bad. It's that you cannot use all the trade execution options that you can for stocks traded on regular exchanges. So I stay away from those just for that reason. And you also want to trade stocks or find stocks that have a fair amount of volume. So in this particular example, now this is from one of the scans I use on stockcharts.com that I developed. So this right here, I look for stocks that have a minimum trading volume of 100,000 shares over the last 50 days. So you want to make sure to have enough volume for buying and selling, okay? So because otherwise you just can't move the shares that you have. So in this particular scan, what I have set up is type is stock, of course. Country is U.S. because that's where I'm in the United States, so that's the set of exchanges that I'll be using. Here I have exchanges not pink, so that excludes the OTC, the over-the-counter stocks. I generally do not trade ETFs. I go for regular stocks because typically they move more than the ETFs do, the exchange-traded funds. Again, volume here. The minimum price that I have set for the last 100 days is $1, and the reason I put that in there is that some of the exchanges have a minimum price threshold for stocks to be listed on the exchange, and if you buy one of the stocks that's on there that's trading for less than $1 and that breaches the exchange's rules, that stock might transition to over the counter, which again you don't want to do. So in this case, I'm going to look for stocks that are less than or equal to $10 per share at the current time. And the other thing I do, I look for stocks that over the last 200 trading days, which is basically a year, the difference between the lowest price found in that 200 days and the highest price is at least 4 times. So the high in that range is at least 4 times the lowest price. So that gives a lot of good volatility. Now, I ran this scan, and I'm going to just show you a few of the stocks that come through with it. So let's go. I'm going to pop over here real quick and look at some of these. I'll get to NVAX in a minute. Novavax. Okay, now these, I don't have positions in all of these, like this, like Grow, I do not have a position in this one. Now, this is the monthly chart, and the reason why I'm showing you this, and again, remember, each one of these candles on here represents a month of trading activity, okay? So when we say monthly, that's what that means, daily, each candle is a day. So you can see that Grow, back in 2006, peaked way up here, and then it's been falling, and it looks like it bottomed out November of 15 for the most part, and has been starting to show some good signs of volatility. So this might be a stock that that you might want to look at. Then we shift to the weekly view. Again, each candle now is a week. Okay, now I want to look at how much it's risen from the low here up to the most recent high. So 958% from the low to the high. That's pretty good volatility. So this would definitely be a candidate for me to look at. Now, the stock price again has appreciated a lot. Okay, because we're way up here now. So you might, it's like, well, you're not exactly getting the best bargain in the world, but the market is turning up right now. So entering at this point, somewhere in here, probably would not be the worst idea in the world if the stock interested you. And again, typically, at this point, I would enter whenever price takes out the 9-day high after it's been coming down for a while. Okay, and again, there's no hard and fast rule here, because one of the beauties of AIM is that you want to enter at the biggest discount point that you can, but the system is designed so that if you enter here, let's say price comes up here and takes out this, and then takes a dive somewhere, AIM is designed to handle that. So you don't have to panic like a lot of traders do whenever the trade goes against them, and they're like, oh my God, what's happening? With AIM, you're just basically going to get you're going to be buying down here somewhere a bunch more shares with that extra cash that you have set aside. So again, I usually look at the weekly chart to get a feel for the stock, whether it's one that looks like AIM would do well with it. And I try to look at a time span back at least 2 to 3 years, because beyond that, there are market conditions and conditions for the company that may have affected things for better or worse. But so 2 or 3 year time frame and more, like this stock actually looks really good going back to 2017. So this would certainly be one I would consider. Okay, another one, now this one I am in, is Kandi, which makes electric vehicles. This one, again, I've had kind of a love-hate relationship with this company for a long time until I got into AIM. Now this one isn't nearly as volatile, okay, because you can see that the price rise there is only 160% through that channel. Now these are not set at 200 bars, or 200 periods. These are set at like 52, but it's 52 weeks, so yeah, I guess that is a year. Okay, but they're at 700% up there. So again, this would be a good candidate stock. And if you look even further out, if you switch to the monthly view, okay, this thing moves quite a bit. So this is a good candidate. And the daily view here, okay, price is kind of bottomed out, and again with the rest of the market starting to turn up, these candlesticks here are looking pretty bullish. Another one, MoneyGram, I'm also in this one. Now, this one has kind of a crazy chart on the weekly, and you can see over here it kind of went totally crazy. But I looked into this one partly because I like the technology, I like the company profile, And that's another thing. You have to, look at the company and decide, is this something that I want to put money into? And another thing you can do is you can kind of eyeball these sorts of trend lines like this, because that gives you an idea of whether these stocks might be breaking out of this long-term downtrend that they're in. But anyway, so I put money in MGI because I like what the company has to offer, and we had this long downtrend here that looks like it's starting to recover from. As far as volatility goes, we start at the bottom, go up to the high here. Again, it's 900%. So again, very volatile. Lots of nice price action there on the weekly chart. Let's see, how many more do we have here? I don't want to bore you with all of these. Okay, let's look at Novavax. Now, Novavax I've been in and out of several times over the years. Now, this is one of the makers of a COVID-19 vaccine that has actually just finished its phase 3 trials. So you can see price went from a low down here of around $2.60 or so cents up to the swing high of 300 and, what was the high here? $331.68. So that was a gain of, if you started at the bottom there, your increase was 12,533% on Novavax. Okay, now this particular company, now not every company is like this, but this particular one, let's switch over to the monthly chart, going back to 1996 or so. Now, if you had entered somewhere in here, and I actually did the calculation, so that's a while ago, but I don't have them handy. So back in 96, 97, if you had entered somewhere in here, and you had used AIM just on this one stock, you would be a millionaire. You would be a millionaire, because it, again, let's say you entered here somewhere, so the peak price would have been only 230% there only, right? But then it would have dropped, and remember, we're on the monthly chart now, so things are a little muddled down. But these huge swings that it makes, even on the monthly chart, AIM loves this. AIM just loves this to death. And again, if you had put even, I think I started with like $10,000 or something over here, but I think if you put even a smaller amount of money, had you been in the stock that long using AIM, just that one position size, you would have wound up with more than $1 million easily. So, now looking at the weekly chart, now this one again, where it is now, I would not necessarily jump into this unless you had a huge amount of capital, because again, remember, you want to buy at least 50 shares per stock. So at a current price of $202, you'd have to have a lot of scratch to do that. But if you had the opportunity to get into a company like this down here somewhere, where the price level is, again, $2 to $10 or so, you could easily make a killing. And my current profit and loss for Novavax, I think I got into somewhere around here, probably the $15 to $20 range, and then got out somewhere around the $40 range, and then got back in. My current profit and loss, I think, is somewhere around 300%. And I'm holding still quite a few shares, and I just bought some after the latest downturn. So anyway, that is basically how I choose stocks. Again, to summarize, you look for volatility. Now there's no right or wrong answer here, but you want to look for big swings up and down. You do not want to have a stock that, especially like on the weekly or monthly chart, started way high off on the left and is dropped down to nothing on the right, because that usually means that it's being diluted, and that's not necessarily good. You want to have a company that has, again, like Novavax here. Let me turn these indicators off real quick. You want to have a company like this that has been able to take a beating multiple times and gets back up, and because that way You know, you're buying on the way down, leveraging that, selling on the way up, rinse, wash, repeat, and making money over time. So this is really a good example of kind of the ideal chart that you'd like to find for AIM. So look for things like this. Again, wild swings up and down, at a entry price, hopefully down here somewhere, although you could buy in a breakout where it's, you know, breaking out over a previous high. But ideally, you know, down in here where you're getting a big discount. And then at a price level where you can buy at least 50 shares per position. So, and that just depends on how much cash you have. And again, I recommend at least 10, ideally 20 stock positions, and probably about 25 to 30% cash total set aside versus your portfolio value. So anyway, that's the summary of how I pick stocks for AIM. Again, if you have any questions, let me know, post a comment. Please hit the like button if this helped you, and subscribe if you find this useful, and let other folks know if you think they might be interested in it. And that's it. Thank you much.